Welcome to the Equity ETF Portfolio Builder. US Investor Edition. Exchange-traded funds are an easy way to invest in a variety of different companies with a single purchase. Other types of investment funds, such as mutual funds, charge fees of 2% or more. ETFs' fees are much lower, meaning more of the returns go to investors, and less to investment banks. ETFs are accessible. This investment strategy can be used on any discount investment platform, in most different account types including retirement savings accounts. Equity ETFs are medium to high-risk investments. There are tax implications with any investment. If you are in a high-tax bracket, it is recommended you speak with a tax professional before investing in equity ETFs. Before you begin, you'll need a Google account. You will also need to open an investment account with an online investment platform. When choosing your investment platform, research the cost of trading and how easy it is to make deposits and withdrawals. When you click the link, you should get a screen that looks like this. Select Make a Copy, and save it to your G drive. Don't worry, when you save a copy, you're the only one that has access to this sheet. When you open the sheet, it should look something like this. We will begin by choosing the sectors you'd like to invest in. A sector is a broad category of the economy. Here, the sectors are listed from least to most risky. The S&P 500 is a basket of the 500 biggest companies that trade in the US market. The Nasdaq is also an American index, which is made up of primarily big technology companies like Apple and Google. The European funds provide a diverse mix of companies in Europe. Next, the Russell Index is a basket of US stocks that are smaller, less established companies. International/global equity indexes are ETFs that include stocks from around the world, except for US companies. Emerging market funds are concentrated in the world's fastest growing economies like China or India. In this field, I will enter the percentage that I would like to allocate to each sector. I usually invest in more US and European ETFs for a more passive strategy. As you can see, the unallocated field tells you how much you have left to bring the total to 100%. Now that you have allocated your account, it is time to choose your ETFs. Scrolling over, there is a list of a handful of options in each category. The name of the issuer and the name of the ETF are listed here. The ticker, sometimes called a symbol, is listed in this row. We'll discuss the symbols a little later when we get into trading. The next column is the MER, which is the issuer's management fee. Index-linked ETF fees are usually much lower than similar products, like mutual funds and managed investment accounts. The next column is the exchange where the ETF trades, and the final two columns tell you how much the ETF will pay you in dividends each year, while the frequency tells you how often. When you have decided which ETFs you would like to purchase, simply select the name of the ETF from the drop-down list. Some people choose the lowest fees, others the highest dividend, and some investors will select the issuer they are most familiar with. When you are finished selecting the funds, enter the cost of placing a trade on your investment platform. Not all platforms charge fees. When you are picking your platform, look for no fee or flat rate commission account. For this example, I am going to enter $10. In the final step, we are going to move to the third tab and enter the amount you've deposited to your account to invest in the cash balances field. For this example, I will use $10,000, but you can use any amount. You have now completed your portfolio setup. Select the portfolio tab in the center. As you can see, your ETFs, allocation and cash balance have been pre-populated. The shares owned field will stay blank for now. In this field, it is the market price per share, the amount it would cost to purchase one share. Once you buy your ETFs, the market value will be the total number of shares owned multiplied by the market price. The percentage of the portfolio is what percentage of your account each ETF is worth. Since you don't have any ETFs yet, it shows 0%. The target column is the sector allocation from the first tab. The following columns show the difference between your target allocation and the allocation in your account. When the fields are green, it means you have to buy more shares to reach your target. If it's red, it means you should sell shares. The field we are most concerned with is the number of shares to buy/sell. This tells us what ETFs we have to trade to reach our target. Your commission charge is automatically calculated to give you the total trade cost. Here, I will be placing 7 trades at $10. Now, we are ready to trade. I am using a demo trading platform for this example, but you can choose any investing app that allows stocks and bonds. Once you have logged in, select Place a Trade. Begin by searching for the stock symbol, or ticker, in this case SPY. Pay attention to the exchange. If the ETF trades on the New York Stock Exchange ARCA, you may see the market listed as a RAC-like on the trading platform, or NYSE-like on the G-sheet. Once you have found the correct ETF, hit select. According to the G-sheet, we are buying 6 shares. I am going to change it to a market order, which just means that you will pay the ask price, aka the amount the seller wants for one share. I am going to repeat this for each of the ETFs in our portfolio. According to the first tab, the Fidelity ETF with symbol 1.Q trades on the Nasdaq exchange, so make sure you look for the ETF that trades on the Nasdaq. Once again, I will change it to a market order and hit submit. Here, you'll see that the Bitcoin ETF trades on the BATS exchange. This is a smaller exchange, called an alternate trading system, and not every online trading app allows you to purchase ETFs from them. Not to worry. If you are unable to purchase a BATS ETF, simply select a different one that trades on NYSE, ARCA or the Nasdaq. The G-sheet won't automatically update the number of shares you own and your cash balance. After placing your buy orders, visit the activity or order status tabs on your platform to get a summary of your orders and the remaining cash balance. Once you have completed the trades, go to the third tab and enter the number of shares you purchased and the cash balance. Note, some platforms charge commission overnight, so you should wait until the day after you place your trades to update the G-sheet. For this example, I am going to assume there was $235 left over after trades. You have now built your US ETF investment portfolio. As you can see, the number of shares is the market value of your pre-populated shares. You'll notice that the number of shares to buy or sell shows the quantities you entered on tab 3. From now on, the G-sheet will track the value of your account and recommend the trades needed to reach your target allocation. You should not buy or sell a share or two if you pay commissions on your trades. Instead, wait until cash has built up or there is a significant change in the market value. You can also use the G-sheet to invest new deposits. Simply add the new deposit to the cash balance field. When we return to the portfolio tab, it will show you the number of shares to purchase. Suppose I need to withdraw, I will enter the amount I want to take out in the withdrawal field. The portfolio tab will show me what I need to sell to raise money for the withdrawal. Remember to erase this field when you have completed the withdrawal. You can also switch up the sector allocation. For example, if you want to reduce your crypto allocation and add to your European ETF, you can update the percentages on the first tab. Switching back to the portfolio tab will show me how much of the crypto ETF to sell and how much European ETF to buy. Thank you for purchasing the US Equity and Crypto ETF Builder. For additional investor resources, please visit smithconsultingservices.ca.